Hi guys, Costela Tanasiu here making a weekly update on the stock market, more exactly for the February 22nd, February 26th. It was a bullish week overall, 20 points up. Not that much if you think about, but we saw some very crazy moves on the downside, on the upside. Okay, the picture is getting a little bit complicated, at least on the weekly chart, which I'm looking right now, and I'm telling you why I say that. As you can see, since the start of this downtrend, okay, we got a pattern of lower lows and lower highs now. Okay, so we had like 2 weeks ago another lower low, but look, right now we have actually this is, you cannot say this is a lower highs because it went above the previous high in here. So the long term looks a little bit uncertain at this point. However, I'm still more bearish than bullish, and the reason is, as I told you before, I see this market moving for the first time below the small 120, and also I see this bearish crossover for the first time since 2007 actually, right? Or 8? I think it was 8. Let's move a little bit back. Yes, in 2008, just before the big crash in here. Actually, a few good months before. It was just somewhere in the middle. So middle of the year, about May, June, I noticed this bearish crossover. And as you can see in here, so this was the sell signal, this was the buy signal. Here came very close to the sell signal in at the end of 2011. However, it didn't happen. Here again on August last year, it they went down. The moving averages almost touched it, but I didn't see any crossover. Actually, also no movement, no closing actually below the small 120. There was some intra-week moves to 1867, 64, I think, so below the small 120. However, I'm taking into consideration only the closing value. So there's no closing below the small 120, but this time in January this happened. Okay, so at this point I think to remain bearish, I mean, to be absolutely sure that this is the beginning of a new bear market, I want to see movement on the upside, no more, no higher than 1980, 1990. Okay, it can go a little bit above this. It's not like written in stone. It's this is an arbitrary moving average which I saw for the last 20 years was working. Okay, so a little bit above, it doesn't matter. But even if it goes a little bit above, I want to see a strong move down again. So that will give me much more confidence than this is indeed the beginning of a bear market. So in here, you actually, during the bear markets, you'll see the most amazing rallies ever. Okay, so people see market moving down and they're salivating because they see cheaper prices. Okay, then they flock in, move market up. Then the big guys start selling again, and they obviously the market move even below the price which they believe was cheap. Okay, so I'm gonna see this again, and that's not a problem of that. Is even this is nothing in terms of rallies. I mean, in a bear market, we will see much more percentage-wise. We see much more crazy than this. So let me look a little bit at the 2-hour chart. I'm tell you immediately what. So I want to pinpoint. I mean, I mentioned before, but for people with less experience in stock market, I say please pay attention to reversal days. Okay, and by reversal, it doesn't necessarily mean you know, a little bit move. It started a little bit on the upside, 10 points. Then by the end of the day, ended minus 10 points. This is not a big deal. I mean, big, huge reversal day. So we had actually one on Wednesday. Okay, so the market opened around 1940 something, you know, then went down for a couple of hours, went down to below 1900, you know, but by the end of the day actually end up in the positive territories by a little bit, but it was a huge rally from the bottom. This is always a sign that whatever the last movement was, that was will continue for a little bit. So when you see things like that, like you saw in here, I mean, a crazy, even if at the end of the day you can safely say, okay, buy it, even if you say it's seems to be up, because definitely for at least one day or two will still moving up. Okay, so we saw that on Wednesday, and also Thursday was also the bullish. So these things happen absolutely almost every time. I mean, 90% of the time, this is a very easy money to make, okay, in a safe side. They're more important this reversal day when they happen at the bottom of or at the top. So let's say it was how to put it, in here, say it's making a huge drop, okay, establishing a new low, then you saw in the same day a huge movement on the upside. It would actually, I think it happened here. That's more important. So when you see this, then definitely this is a bullish signal for a short time. It doesn't matter. You can go with the rally or with the downtrend for a few days safely. Okay, so in here, what will be bearish again will be, for example, let's say we'll make a higher high, okay, in here, but definitely something like here 1980, and the same day, okay, we see a huge move like 30-40 points on the downside. So he ended up in the morning with a move on the upside, establishing a new high, then at the same day move strongly down. Okay, then you say, okay, that's we're gonna continue for a few days on the downside at least. Okay, so this is, I'm telling this for if you want to take advantage of this short-term or intermediate time frame ups and downs, you know. But for now, I mean, what I, since I start this YouTube channel, you know, my idea, what I want to, the message I want to give you is, what is the big picture? Okay, it is still a bull market or we started the bear market. So I'm not really interested in this. These are, it's just noise for me. So this is a 2 hour. You can look in 2 minutes, 1 minute. Okay, it doesn't matter. This I don't really care for this. Okay, so that's why I'm looking, not even daily. Daily doesn't tell me too much. Okay, this is so noisy. I mean, it's almost impossible to make an opinion. So I'll go to weekly. Weekly for me is the best. So in a sense that it has enough points, you know, data points to have a meaningful chart. On the other hand, you know, if you see a pattern here, it doesn't matter what happened on the short-term time frame. So, for example, if this is a bearish, like this is the bear market here, it doesn't matter what happened in short. Actually, if you can be a contrarian in this case. For example, right now, you move here, I say, but the long trend is down. Definitely you can short. Okay, even if you short and goes for a few days on the upside, it doesn't really matter. Okay, because eventually will go down again. But we need first to see. I want to be sure 100% that this is the beginning of a new bear market. The signs are there, okay, but there is a lot of denial. I say this people is in denial, even the big guys, you know, people who make their decision on the fundamentals. They don't know. I mean, they split like 50-50 right now. If you look on TV, if you look on Market Watch, you know, all these experts, one day say one thing, next day say another thing. So they don't know what to do. at the moment. Okay, so let's wait a little bit more. So probably maybe by the end of the year we'll see a strongly move either way, and we'll know for sure. But for the next few months, I expect more of this volatility steps. So if you want to go in there, that's fine by me. Um, Obviously, I'm talking mostly about myself. I cannot control what you're doing, and I'm not even trying to suggest that. You can, depends on your style. If you're a day trader, whatever, you go there, or for a short-term trader, you have, obviously you don't need my advice. You go in and out very fast. Okay, so I'm talking here for people more conservative. So they want to go in to buy, or they want to sell or go short again. Wait there for a few good months. At least in the case of the bear market. Bear markets are very short usually. Or for the bull markets, you get a bullish signal, like it was in here. In what was that? In 2010, middle of 2010, somewhere in here. Okay, it was not the best idea. Look, if you enter here, then I had a huge drop down, but it doesn't matter. Once this is established, it's a bull market. That's it. You go in there, and even if on a shorter time periods you see a move down, doesn't matter. You will be okay overall. So I'm talking for this kind of people, okay? So which want to be a little bit, I invested now and I can wait for a few years to go up, then eventually sell when start to go down. So so this is the picture on S&P 500, which is the most trusted index for me. Let's have a look a little bit on Dow. The same picture. Actually, this is, as I say, this is the most bearish of all, because this crossover is more obvious in here, and again, it's below the downtrend line. So this is the most bearish out of the three major ones. Nasdaq at the same time. Nasdaq is the most bullish, because look, Nasdaq, I don't see any bearish crossover here. It's very close. The moving average touching, okay, but it didn't happen. And look how close to barely below the small 120, barely. So that's the most bullish one. And this is the bull market uptrend line. Okay, it was challenged, but it never went below. I didn't see a closing below this data. So I think once the Nasdaq goes into bearish territory, technically, probably it's a done deal. Okay, but we need to wait for a few months probably for this to happen. Okay. Silver and gold. I know many people like to trade this. Silver had a pretty bad week. Okay. Almost 3 points lost on Friday alone, but it was more than that. I'm sure it was. So as I say, that was the downtrend channel. Actually went as soon as I touched it, it went down. But gold, on the other hand, it's a little bit more bullish than silver. Don't try to speculate why. They're supposed to go pretty much together, but I think people prefer gold to silver. So it had a little bit of move down in here. You see very little, but it's definitely out of the downtrend channel. Okay, so even as I mentioned before, even if I see a move down, but not below this downtrend line. So if it goes here, like what is this? 11, 12, 112. Okay, that will be a problem. But anything like $1 above, like 113, 114, even that will be good. Okay, so no problem. And as you can see, look, these are not the best pair of the EMAs for gold, but even if we keep it in here and have a look, pay attention that this is for the first time since the downtrend and move above the small 120. Okay, so this is something more serious here. Okay, so as I told some friends on MarketWatch, this is for the first time for me when I think it makes sense to buy gold. Okay, anything, I mean, people are bragging about buying all this way down, you know, just to see the prices moving even lower. So even if I didn't get the bottom, it doesn't matter. Okay, but now, for example, I'm not trading, but just saying, now it makes sense to go a little bit on gold. Okay, so let's leave it here. Okay, I'm not talking. I'm gonna talk about the whale because we'll make a little bit to move up, no, nothing significant. Okay, and let's leave it here. So let's see how next week will do. So again, looking at the S&P 500, what I'm really watching is this moment 20. So I don't want to see a closing above this this line here, like 1980. Okay, this is the value here. I prefer, even if this week will be on the upside again, I don't want to see it crossing this. Or if it crosses next week, I want to see it back. So for this scenario, this really bearish scenario to function, bearish in the sense of a new bear market started. So bulls will be safe only will manage to make a higher high. I mean, anything above 2150, you know, but right now it doesn't look they have enough ammunition to that. Okay, I'm gonna stop here and